Okay, welcome back to the failed breakdown channel. We're going to be looking at a couple of different failed breakdowns today from Thursday, the 4th of December. Quite a lot of action today around the 68.54 level, and then a nice clean trade in the afternoon around the 68.45. Bit of a mixed day for me personally. I started the day with a full stop, potentially an invalid entry I took, and then two smaller wins on the subsequent cleaner failed breakdowns that occurred later on. So that puts me just a little bit red on the day. So mixed bag, but plenty of lessons to learn and take away. As ever, this is based to the best of my ability on the methodology taught by Adam Mancini. Check out his newsletter. Highly recommend subscribing. You'll learn a lot more from him than you ever will from me. Okay, given there's a few setups, I'll try to run through them as quickly as possible. Let's take a quick look at the context and then get into the execution, what I did wrong, and some things that went well. Okay, so real quick look at the context here on the 4 hour. So pretty much the same story. It has every day this week opening near the high of this consolidation range, the range being kind of between 68.05 and 68.63. But interestingly, all throughout this week, we haven't really come down and tested the bottom of the range. We've just been steadily making higher highs, but the range is kind of getting tighter and tighter. So on the back of the very, very bullish Thanksgiving week, just compressing. And not only that, from about Wednesday lunchtime into the morning session, things have been coiling even tighter and tighter. So just flipping over to the 15-minute, and we can see that here from about midday, and yesterday into the open today. We've really been between 68.70 and 68.55. Very compressed in the evening session, so we're looking at really just a 15-point range until we get this little poke above, and then similar story, little kind of failed breakout, and then that will give us our flush to set up the trade around the 68.54 level. The 68.54 level, of course, is the overnight low, so wasn't necessarily part of the trade plan. But of course, when we see a low like this, 68.54, it bounces from there around the London Open straight up to 68.80, so a nice 25-point bounce. So a clear significant low to trade around. Maybe not the highest quality, and the context isn't the best either. We're at the top of a consolidation that's been getting tighter and tighter. So let me flick over to the other platform and get into a couple of the trade setups. Okay, so here on the 15-minute chart, I've got time set to 9:15 Eastern, so just 15 minutes before the open. And I'm going to play this about 10 times speed and initially just discuss a trade entry I took that perhaps in hindsight was an invalid entry. Certainly not a good one, and not one that Adam took, so that kind of tells you all you need to know about it. And I'm going to discuss why I took it and perhaps why I shouldn't have taken it. So we're up here at 68.80. We've bounced off the 68.54, that 25 points, establishing the overnight low as a significant low that we can trade around. And that was a level I added to the chart. I think from Adam's trade plan, he had 68.52 as a potential level to engage a failed breakdown on. Obviously, with the new structure there, we'll trade the 68.54, not 68.52. I mean, generally speaking, I'm considering every level to be 2 points wide anyway. Every level is a zone in my eyes, so I don't fuss about a couple of points here or there, and just trade on the most recent structure. which obviously in this case is 68.54. So I'm going to run things a little bit more quickly here because there were a couple other setups I wanted to talk about too. Running at 30 times speed. So this is the open here right now. It's what the light blue zone is designating the AM session. Okay, let me slow it down. So you can see immediately we're kind of whipsawing up and down quite dramatically off the open, but in a relatively tight range, and we're getting back into this tight consolidation we've been in overnight and really the end of yesterday afternoon as well. But we are getting a reasonable flush. I think the first point to note about this flush is it's not a clean kind of cutting straight down flush like the type we had yesterday. It's kind of up and down, and you can see that a bit more clearly here on the range chart. Gone from 80 down to 60, bounced to 70, dipped to 62, lifted to 72, and then we're here back down at 56. So just kind of chopping. It's not a clear, clean sell. It's not necessarily a scary flush. I would consider this, and this was really one of my first invalidations in hindsight. So let me just slow this down, because this is kind of what I viewed as the start of type 2 acceptance when I pause it right here. So this is zooming in on the range chart a little bit. We've dipped down here to 51 and a half, so shallow, very shallow flush of the 54. So then we'd be given a shallow flush, we'd be looking for that type 2 acceptance where it lifts back above the level, dips, and then lifts off. Dips either to or just below the level, and then lifts off from there. So let me slow it down a little bit. Let's go with 4 times. And I think just to reiterate or to try and kind of quantify the laziness, maybe say, of the flush, it's taken us about 45 minutes to drop the 30 points. So if you think of that in terms of a gradient, that's like 0.67 points per minute, which is not particularly scary. I like to, anything more than a point a minute is what I use, and this is nothing to do with Adam, but that's just a gauge I use to kind of judge a scary flush. I mean, often we get flushes that are way more extreme than that, but a point a minute is sort of a threshold that maybe you can use to judge the scariness of the flush. So right here, this is what I'm looking at to sort of assess what I considered at the time type 2 acceptance, where we've flushed, reclaimed the level, and then we're dipping, and then we reclaim the level here, and right about here is the moment I take the entry some point here where it lifts up. So just really looking at that structure there of type 2 acceptance. So it was right around 10 o'clock that I entered, which is coming up in just a few seconds here as we lift back up through the level. So right about that point was where I entered. But I think on reflection, one of the things I noted, so on top of the sort of lazy grind down through the level from the pre-market and into the open, when we get this type 2 acceptance, it actually goes on to make a lower low here. So not only does it flush the level, but it also flushes the initial Um, it also flushes the flush low. And this isn't one of Adam's rules, but I just kind of noted that on reflection as maybe something, another potential caution to note. And when you start stacking up all of these cautions besides each other, maybe that is a way to create a more robust antithesis to prevent one from entering the trade here. So, those being so far, we've kind of got the context, the coiling overnight, price just really not moving freely. When you're stuck in a 10 to 15 point range, okay, it's opened up a bit here, but where we are now is right at the bottom of that range, and for the trade to work out, you'd be needing it to come back through the range. So that the laziness of the flush, this kind of feature that I've just discussed with the type 2 acceptance making the lower low, the relatively lower lower volatility with price just not kind of moving cleanly with each swing, just being stuck in pretty small ranges with each rotation. The significant low is certainly passing criteria, but it's not the highest qualities. Maybe B grade, maybe B plus. And then, additionally, points to note, we did have some reasonably significant structure right overhead at the 68.60, but that was what I was looking for my first take profit. So we had a nice low here at around 6:15 in the morning, and then it tagged it here on the way down too. Is that it? Yeah, so that's it. You can't really see it on the 15-minute chart anymore. So, those were some of the potential invalidations I noticed. I think probably the big thing is really just the lack of scariness in the flush. That's certainly an easy thing I would say to identify to caution one before entering a trade. So let's just crack on. So I entered at that point. And I was pretty much in drawdown for the entirety of this trade. And, there was a potential to get a first trim here. But I got what I would call a little bit unlucky. I had my stop down here at like 68.50. Price never actually hit that on ES, but I'm cross trading to MES. And I guess on MES it dipped a point lower than we did on ES and just tagged my stop. But it's just one of those things. So yeah, could have avoided it by having a bit of a lower stop. I was about at 2 points below the low. I think Adam recommends like 3 to 5. If I'd been 5 points below the low here, I would have had about a 15-point stop, but that would have allowed me to get my first trim at 60 after we would have saved me from stopping out and getting it a little bit later. I was still in at this point. It comes later. Let me fast forward it. So yeah, those are some reflections from a full stop I took this morning. Always painful taking a full stop with this strategy for sure. That is one of the downsides. The low RR, when you do take a full stop, it wipes out at least two solid trades. So yeah, very important to avoid those. And as I mentioned, Adam didn't engage in this at all, so he clearly identified, that this was just low volatility chop, not worth engaging in. So something I need to sharpen on for sure. Okay, let's crack on. So yeah, right there was where I got stopped out. And it pushes up there, so that was a potential trim at that point had I not stopped out. But still, ultimately there, I would have stopped out on the runners. And this here, right here, I've just ripped through it. But that right there was the entry, and that was the entry Adam traded. So I actually took this again at this point. I'd stopped out here, and then I re-entered at right around 10:30 when Adam got in, and that was the trade, the only trade we should have engaged in. So, I think that if you're looking at, not many people use a range chart, but you can kind of clearly see how price action cleans up instead of this barcoding side by side. Here, the bars aren't stacking side by side. Price is actually finally moving. Each one of these bars is 5 points, 20 tick range chart. So here, we've got 15 to 20 point swings moving nicely in each direction. So yeah, that was the area to engage. But here we didn't, we just ripped straight back up through the level. There was no form of acceptance at this point. You don't really want to consider this acceptance because we've gone on to make a much deeper low, and we've tested the 68.47 support, and that was really Adam's trade plan there to hold excuse me, to hold 68.47 and recover 52. Obviously we're talking about 54 now because of that overnight low. So yeah, maybe that's a potential another invalidation really here where I'd entered. We hadn't yet gone down and tested that 68.47. So yeah, no acceptance when we push back up through. So use the non-acceptance protocol, wait for it to get 5 points above the level. So that puts you about 68.59. Wait a couple of minutes and enter somewhere around here. This will run nicely from this point, and then we'll get a much cleaner setup lower on, which I'll go on to talk about as the third trade. So yeah, that runs nicely. A couple of targets. We're in, worth noting, we're in pretty choppy conditions here. So even if you get in at 60, you want to be taking off at the next level up around 64 and then 68. Those should be your trims. Bit of a retest here. And if you missed this entry, there was a potential to get in here. We actually get kind of the type 1 acceptance here. So there was another potential entry there for anyone who missed this one because it did move quite quickly. So here, we've dipped, we've not broken the low, so this would be considered FBD retest. Return to the level, dip, and then push up through with reasonable momentum. Just chop around again a bit, but runs another couple of targets after that. So I'm going to speed up a lot here until we get to what was it? It was the price, the other one that was down at 45. Yeah, that's right. So these are now a cluster of two lows. See it on the 15-minute. Each of them has run from about the 45 level up to 68. So 23 points, two lows together, so a cluster of lows. So this area now is clearly going to be an area to engage another failed breakdown if we dip from here, and ultimately we will get that. And this one is very clean. So if you avoided all of this in the morning, well done. Even these latest setups, this setup that comes here. Oh, stop. Sorry, rip through that very quickly. Let me slow it down 2 times. So obviously we've just dramatically flushed through the low. Nice, clean, scary flush. Compare this move here, just bars stacking one below the other, compared to this move this morning where we're just chopping up and down on the way down, and the difference in kind of gradient. Let me just kind of. So this portion of the flush here, the kind of the scary part, has dipped about 26 points in 10 minutes, so 2.6 points per minute. So compare that to the 0.6 points per minute in this morning's flush. The gradient here is much steeper, much scarier, exactly what we are looking for to obviously entice and trap those shorts. So I've stopped it here right as the acceptance. Nice, kind of a little bit of hybrid, but sort of type 2 acceptance. coming in here where we pushed up above the level, above the 45 level. I've got 47 marked on my chart here still from yesterday's plan, but obviously we're working off the latest structure, which is actually at 45, cluster of these two lows. So we pushed through 45 to 49, so above it by 4 points, and then we're going to dip back. Let's carry on the replay. Dip back beneath. I was really hoping at this point we would get the dip, and we did. I don't remember when my entry was. So right now here, everything is set up perfectly. We're just waiting for price to, well, in acceptance, firstly, waiting for sellers to play their hand and for there to be evidence that that is a weak hand, and then for buyers to come back in strongly. And the strength of the buyers is the trigger after we've seen weakness from the sellers. So reasonable volume here too, worth noting. You can kind of see how the delta has flipped here from being solidly negative to generally positive, and you would expect that in a kind of V-shaped bounce like that. Somewhere I think right around here was when I took my entry, right around 32 minutes past 2. So I was maybe a teeny bit early, but it ran pretty cleanly from this point. So this was really a textbook fail breakdown. So anyone looking to study one, this is really nice. It's kind of exactly what you want to see. Came back to the level. Was really hoping it was going to dip. We did get that dip, that type 2 acceptance where we poked above, dipped below, haven't threatened the flush low, and then lift again, and you just get in on that lift, nice and easy, and it runs several levels from this point. And I remain, personally, I'm still in that trade. Still got my runner in that trade, and I'll carry that through into the evening session. Stop the runner goes below the lowest low, so that for me is down at the 34-ish level, just 10% left from the trade. So 2 trims. I was maybe a bit too conservative with my trims here, but given how choppy the day had been, and haven't taken that early loss, I was keen to get risk off. But very nice trade there. So I will leave it at that point and see you all in the next one.